Welcome back. As promised, our old friend Kurt Pearson from Compass Financial joins us, and the market has slowed a bit after some encouraging gains.
Yeah, the stock market seems a little bit stuck in the mud right now, so what advice do you have for investors, Kurt?
Well, we are in what most are saying is a secular bear market, which means since about March of 2000 when the market peaked, the market has been in a very wide trading range, and we're now in the kind of the bottom third of that trading range. But even recently, in the last couple of weeks, the market has just kind of been stagnant. Some of that is due to the volume of the stock market right now. What I'm encouraging investors to do is to really look at their portfolios. Since the market put that low in back in March, as they're getting their statements, they want to be very diligent about trimming the gains off, reevaluating their equity to bond mix. Is that fit for their suitability? A lot of the panic is now out of the market, and so it's a very good time for people to evaluate. Even though the stock market is kind of stuck in a trading range, there are some good opportunities in other asset classes, and that's what I really want to encourage people to do, is to press their advisors, and press their financial planners to say, hey, what asset classes are performing and how much money do I have in those asset classes?
Now we're hearing the Federal Reserve has shifted gears and has stopped buying at the U.S. Treasury auction. What kind of impact is that expected to have?
Yeah, it's a trend that we're really watching closely, because if the Federal Reserve stops buying U.S. Treasuries, they've been very active in those auctions up until this point. They've given some indication that they're going to back off of that. If that happens, U.S. Treasuries could begin to drift in their valuations, which means interest rates are bound to go up from that point. So we are watching that closely over the next 2 to 3 months. If some of the foreign countries take the lead of the Federal Reserve and stop buying in those Treasury auctions, that's going to be an issue as well. And then if the Federal Reserve does come in and bump interest rates higher, of course that's good news for those who have money out in CDs and fixed income investments, not so good news for those who have money borrowed and are concerned about their interest rates.
Okay, now I realize this is a long ways off. We're not ready for the holidays just yet, but we keep hearing that people are going to be saving. Is there any way of telling if this is going to have a big impact on sales as we do get closer to the holiday season?
Yeah, the trend, another trend that we're really watching closely is consumers would rather save right now than spend. And in fact, the saving rate in this country is at its peak based on history, and it seems to be ready to climb another notch. If that happens, that means people aren't spending at the retail stores. It could bode for some an interesting holiday season for retailers.
You've given us a lot to think about this morning. If people want more information, how do they get in touch with you?
Our local number is 327-1020, or our website is compassiowa.com.
All right, thanks, Kurt.